Welcome to Wall Street Unspun with your host, Peter Schiff.
But it's a giant bubble in search of a pin, and it's going to find one.
Are you confused with the ups and downs in the economy and what it means to you?
Don't believe the propaganda, and that's what it is. When you're listening to an analyst on a lot of these popular financial shows, you're not getting investment advice. You're getting propaganda.
Get ready to untangle the web of misinformation provided by the mainstream media.
These firms are trying to sell you stocks. Their real clients, their banking clients, are trying to get rid of stock.
And now, here's your host of Wall Street Unspun, the president of Euro Pacific Capital and a licensed broker with a passion for truth. It's Wall Street Unspun with Peter Schiff.
Hello, everybody. Welcome to another live episode of Wall Street Unspun, midweek market update. This is Wednesday, December 23rd, 2009. Well, the decade is closing in on an end here. I think, actually, this is going to be my last show of the decade of 2009. I'm looking at my calendar, and I have a political event next Wednesday that is going to mean I'm going to miss this show. So this is it for me. The show will go on with a replacement, a guest host on Wednesday. Potentially, I might try to call in if I can, either before or after. I'm meeting with one of the town councils, Westerfield, Connecticut, Republican Town Committee. So that's going to be next Wednesday. So this is my last show. Again, I do the show every Wednesday when I can at 8 p.m. Eastern, 5 p.m. Pacific. You can hear it on shortwave, 5.07 megahertz, and on my website, www.europac.net. The number to call, I'm taking live calls at 888-678-9597, 888-678-9597. Anyway, also let me wish Merry Christmas to all my loyal listeners who celebrate Christmas in a couple of days. Hanukkah has come to an end a couple of days ago. So happy Hanukkah to everybody. And have a happy New Year as well. As I said, this will be my last show, unless I am able to call in from the road to do the show. But remember, you can still watch my video blogs. I'm posting a lot of video blogs. I have one for today, but I'm having internet connectivity problems. I've been trying to upload that YouTube video for hours, and it hasn't worked. It's really slow right now. I'm trying to upload it again, and normally it's supposed to take me 5 minutes to upload it. It's going to take over an hour. So maybe by the end of this show, that other video will be up. Who knows? But it will be up at some point. So if you missed me on the radio, you can always check me out on the YouTube channel. My main YouTube channel, Schiff Report, is where I have been posting. I have about 16,000 subscribers now on the Schiff Report. I'm also going to be, I think, starting to put up some political type videos on the other YouTube channel, Schiff for Senate. So if you're signed up for the video blog, Schiff Report, but you're not signed up for Schiff for Senate, you might want to go to that other YouTube channel, Schiff for Senate, and sign up there. So to the extent I do post some political type videos on that YouTube channel, you will be alerted that they're there, and you'll be able to go and take a listen to them or look at them. Also, quickly on politics, I know we're coming to the end of the quarter, the fundraising quarter. Since I announced my candidacy late in the last quarter, I wasn't required to actually make a filing of my quarterly fundraising. I'm going to have to file all my fundraising now at the end of this quarter. So there's about another week for people who want to donate to the campaign to do it before the end of the quarter, which would be very helpful to try to get some more fundraising in this quarter. That'd be good. So if you want to donate, if you've already donated, you can donate some more at shiftforsenate.com. And if you haven't donated at all, this is a great time to get started. Make your first donation before the end of the quarter, so I'll be able to count it towards this quarter's fundraising. A lot has been going on with the campaign. I've been very, very busy. We opened up our headquarters in Milford. We had a party there last week, very well attended. I think 200 to 300 people came by. The whole place was pretty packed, a lot of supporters. Some came from out of state, but most of them were from Connecticut, the vast majority. But it was good to see so many people turn out on a very, very cold day, I might add. So people were still venturing out into the cold. We're also in the process of bringing on some other another consulting firm to help with the campaign, which I really believe is going to kick into a higher gear in the new year. I've been doing a lot of these town meetings, but we're starting mailings. We're going to be putting together and formulating our direct mail strategy, our internet strategy, our media, our radio, our TV strategy. The primary is not until August, so it's still about 8 months. It's a long way to go in this race. And as I said earlier, 2 of my opponents have dropped out, so it's down to 3 people. I'm currently, third among the 3, but I think I'm well positioned to break out once we really begin the campaign in full force. But of course, we can't do that without the funds necessary, and so you can help by making a donation. Of course, you can also help by volunteering at shiftforsenate.com to make phone calls, or if you're here in Connecticut, to work door to door and do other things to help get out the vote and raise my name recognition here in Connecticut. Also, a little bit about politics. It seems like the health care bill is closer to becoming an economic reality, more likely an economic nightmare once they pass it through, apart from shredding what remains of the Constitution in order to pass this bill. In fact, I commented about some of the constitutional problems with the bill on the video blog that I'm trying to post now on my YouTube channel. But this is the last thing that the economy needs. I mean, we're suffering from an excess of government. We're burdened with trillions of dollars of debt. Our economy is unproductive. We have millions of Americans unemployed. We have an official unemployment rate of 10%. An unofficial and more realistic unemployment rate of 17%. The last thing we need is an expensive new federal entitlement, which is exactly what this is. They are expanding Medicare. They are enacting this huge new federal bureaucracy. Of course, our politicians are touting this as a deficit reduction bill. Somehow they're claiming that they're going to extend health coverage to millions and millions of people, and it's not going to cost us anything. In fact, we're going to make money on the deal. That is completely ridiculous. You got to remember, when the government first proposed Medicare in the 1960s, they had cost estimates. And, we're already well in excess of 10 times what they said it would cost by this point. Even if you adjust for inflation, they were so far off. It's amazing. And now to come back today and to try to, say with any kind of credibility that this new plan is going to pay for itself and actually reduce the deficit. I mean, sure, there are a lot of tax increases in this bill. And, although the tax increases conveniently kick in long before a lot of the benefits ultimately kick in. But, of course, those tax increases will simply be spent on other government programs. They're not going to go towards reducing the deficit. They're certainly not going to be there to shelter any of the costs once more of the benefits start to kick in. But this is just another out-of-control government spending program that we can ill afford. We're already bankrupted from all the other government programs that led to such a high level of taxation and regulation in the first place, which is what has brought our economy to the brink. Now, I also mentioned, on my video blog, as this decade is coming to an end, Time Magazine ran a story a couple of weeks ago before they anointed Ben Bernanke Man of the Year, proclaiming that this has been the decade from hell, and that the next decade promises to be a lot better. After all, you can't get any worse than the decade we just experienced. Well, Time really doesn't understand that the decade from hell is the one that we are about to enter. It's going to get a lot worse. This has actually been the decade that has paved the way to hell. This is the decade where we committed all the economic sins, which is why the economy is going to hell in the decade ahead. I mean, this, after all, was the party decade. This was the decade where we went on a consumption binge. This was the decade of the housing mania. This is the decade where we loaded up on SUVs and plasma TVs and granite countertops. This is the decade where we threw all caution to the wind and spent like drunken sailors. The hangover is coming up in the decade that we're about to enter into. And unfortunately, because of all the things that are being done at the end of this decade, the decade to come is going to be that much worse. The monetary policies of Ben Bernanke, the fiscal policies of this Congress and this president are worse than anything that we did during this decade. And the monetary hangover, the fiscal hangover is going to be worse. The collapse that's coming, whether it's going to be in 2010, 2011, 2012, no one can say for sure, but it is coming soon, and it is going to be horrific. As I said, it's going to take the form of a currency crisis, which is going to drive interest rates and consumer prices up into the stratosphere and bring our economic problems to a whole new level. Now, you've got all these people out there now that are so convinced that because we got an economy that grew at 2.2% last quarter, even with all that stimulus, that somehow the economy is recovering. They're looking at consumers that are back in the malls and shopping and thinking, aha, we're back. The good old days are here again. We're going to be out shopping. We're going to be out spending. This whole phony economy is going to come back. It's impossible. It can't come back. All of that phony growth, all that consumption was a function of real estate wealth that will never return. All Americans can do now is spend stimulus money, but the government can't stimulate forever because the Chinese and the Japanese and the rest of the world won't loan us the money to do it, and eventually the money that Ben Bernanke is printing for us to spend won't have any value. We won't be able to buy anything with it because it won't spend anything. I just got a Christmas card in the mail the other day from my friend Jonathan Honig over at Capitalist Pig Asset Management, and he enclosed in the Christmas card $10 trillion Zimbabwe. And, I have several of these $10 trillion bills. In fact, I actually have a $100 trillion bill. I wonder how much stimulus the Zimbabwe Central Bank can actually create by running these puppies off the printing presses and sending them out. And so we might end up in the same situation if we don't cut the stimulus out ASAP. But anyway, the guys on Wall Street, are touting these numbers. We had the personal income and spending numbers that came out today. What are they all focused on? The spending. We're Americans spending. We're consumers spending. And if they're spending, they're happy. I don't want them spending. They're spending money they don't have. They're spending borrowed money. They're spending money that they should be saving. We need to rebuild our economy. We need to rebuild our infrastructure. We need to rebuild our manufacturing base. None of that can be done if consumers keep spending money. They have to save money. That is the key to economic growth, and that's the one thing that nobody in Washington or Wall Street seems to understand. And it's why we are setting ourselves up for a major, major economic catastrophe in the years ahead when this stimulus wears off. And it's amazing how small a bounce we're actually going to get. This 2.2% GDP, the government originally estimated it at 3.5%, but 2.2%, considering everything that they've thrown at the economy, all the money they've printed, that's all they can get. We came out of the 81 recession, which was not even as bad as this one, and we didn't have as big a government stimulus. In fact, I don't think we had any stimulus. We came back with 6 to 8% GDP growth. Now we're talking about 2.2, and who knows? That might be as good as it gets. I'm sure the government's original estimate for the fourth quarter will probably be higher than that, but, by the time they finally, get it right, who knows, how much they'll chop it down. But again, none of that is measuring economic growth. We're measuring how much money we're spending. We're measuring the money the government is spending. We're measuring the money that consumers are spending, but we're ignoring all the debt that's being accumulated to spend the money. And that GDP growth is actually undermining our economy. The economy is in worse shape because of this GDP growth. It's not in better shape, and so few people seem to understand that. Looking at the markets, the gold correction has continued. Although today it was up a little bit, but the last couple of days the price of gold was still under pressure. Gold stocks have picked up the last couple of days. Maybe that shows to me that the correction is nearing an end. Gold corrected about 10% from its peak above 1,200. The gold stocks corrected by about 20%. Maybe that's enough for this correction, and we might be headed higher. In general, the stock markets around the world have been very strong. Stocks have been strong. Even the U.S. market's been strong. We've had the exception has been the bond market. Since I did this show last Wednesday, or was on the show, the bond market has just absolutely gotten clobbered. Interest rates are at a 4-month high right now, and to me it looks like they're headed a lot higher. Now, of course, the pundits on television are trying to say that we shouldn't worry about rising interest rates. After all, they're a function of the improving economy. Well, I think there's another factor, and I think it's inflation. I think inflation is getting worse, and our creditors can see that. And it's inflation that is eroding the value of bonds. Inflation is causing creditors to demand a premium for holding bonds. Now, the GDP is only growing because of inflation, right? The government is creating inflation in order to finance all that spending. So when some people say, well, interest rates are rising because the GDP is rising, in a way they're right, but they have to look at why the GDP is rising. The GDP is rising because of inflation. So it's inflation that's causing both interest rates and the GDP to be going up. Now, at some point, if the bond market continues to back up, it is going to become very, very problematic for the markets and for the economy. The question is, when is that going to be? You remember back in 1987, before the stock market crash, interest rates, yields were rising for quite some time, and then all of a sudden, the market figured it out, and we had a horrific decline. I don't know, how far rates have to go before the market starts to appreciate the fact that higher rates are going to hurt the economy and the market. The one thing that's propping up the housing market, apart from all these government supports and subsidies, is the fact that interest rates are still so low. And again, that's also due to the Federal Reserve and its policy. But at some point, those rates go away. And it's also going to affect commercial mortgage. It's going to correct business credit, and it's going to affect the government's cost of debt. The government is trying to move some of its shorter dated maturities out to the longer end of the curve, which is something it should have done a long time ago, but that is going to get increasingly more expensive. And right now there's been a lot of focus on the whole idea of sovereign credit risk and sovereign default. Up until now, it's focused on Greece and other, countries in the European Union. But pretty soon, that attention is going to be focused where it belongs, right here on the U.S. government and the sovereign risk here, that the U.S. government will default on its debt. And that is a real risk. I mean, as I said, there is no way we can pay it off, so default is inevitable. The only question is, what is the form that default takes? Will we default honestly and not pay or restructure, or we default dishonestly by creating inflation and paying off our creditors with worthless money? The big problem with that method of default is it affects everybody who holds U.S. currency, not just people who hold U.S. treasuries or other debt, and it affects everybody who holds any debt instrument. If you loan money to a private company, your debt's going to get wiped out. When the government wipes out its debt with inflation, it wipes out everybody's debt with inflation. That's why that is the worst way to default of the options. But unfortunately, politically, that's the way most countries go. Anyway, let me grab the phone calls that are coming in. First up is going to be Matt in Illinois. Go ahead, Matt.
Hey, Peter, how's it going?
Oh, good. How are you going?
Pretty good. I saw you at the Hyatt in Chicago a couple months ago. Thanks for coming out and talking to us all the way out here in the Midwest.
Yeah, no problem.
Yeah. I had a kind of a political question, actually. I'm a union electrician in the city, and I'm not sure what Connecticut's union density is, but I just was wondering what your general stance on organized labor was.
Well, I have no problem with labor organizing, but I do have a problem with the fact that in many cases, organized labor is able to coerce, people to join unions and is able to coerce management with the help of government regulation. I think people should have a right to organize into a union if they want, but I also think that employers could have a right if they want, if people in the union strike, they should be able to fire them. They should be able to replace them with other people. There should be no government interference in that. I mean, everybody has a right. I mean, just like if an employee has the right, to say I want more money, the employer has the right to fire that individual. So.
Okay.
Unfortunately, what happens is you get government rules that tilt the playing field and put the unions in a position where they can really extort demands on employers, and that's not right. And unfortunately, a lot of the companies that used to be heavily unionized are no longer in business. And that's not a coincidence. One of the reasons that our manufacturing and so many businesses became so uncompetitive was because of the labor unions. I mean, one of the unions reasons that General Motors.
Would you also agree that, like, some larger companies, also try to lobby and get legislation that to make themselves stronger, when dealing with unions?
I don't like corporate welfare any more than I like individual welfare. The government has to be neutral. The government should not be empowering one side or the other. They shouldn't be trying to find ways to have special breaks for corporations, just like they shouldn't have special breaks for labor unions. We need to have a free market, and the government needs to be neutral. What the government needs to do is simply enforce contracts, and that's generally a local function. I mean, most of the contracts are going to be litigated in local courts, but that's the government's role, to make sure that people abide by and live up to the agreements that they enter into. But the agreements need to be entered into without government coercion.
Okay. All right. And you know what? I got another real quick question, then I'll just hang up. I completely different too. I know you supported Ron Paul's audit the Fed bill, but what do you think about ending the Fed in general? And his book that came out and everything.
Yeah, well, I think the Fed has done a lot of harm, in its, how it's been around since 1913. And so I think the nation would be better off without the Fed, or had we never, gone in that direction. But given where we are now, I definitely want to audit the Fed. The question is, would I end the Fed? It's a difficult thing to say. If I could decide what replaced it, then I would end it. But I don't have that decision. So the question is, if we ended the Fed, given who's in Congress right now and who's the president, what might we replace it with? We might get something a lot worse than the Fed. We might have the federal government just printing money directly, and then have absolutely no check. Imagine if Nancy Pelosi was in charge of the printing press. It'd be even. So it's kind of like just getting rid of it without knowing what's going to replace it is a very dangerous thing. That's why I think initially just reforming it, maybe reducing its powers, trying to restore its original mission, might be safer than just repealing it. And then who knows what's going to happen? The old expression, "the devil you know."
Right. Okay. So one step at a time, I guess.
Yeah.
All right.
Thanks for your call.
All right. Thank you, Peter.
All right. Let me take the next caller is Tom from New Jersey. Go ahead, Tom.
Hi, Peter.
Hi.
Hey, I just wanted to say first I agree with your sentiments on the government-run health care.
Thanks. I wrote a commentary on my website today, and, the main thing about insurance, and this is, the politicians like to demagogue it, but insurance is all about people protecting themselves from events that are not very likely to happen. But if they do happen, it has a big cost, and that's what makes insurance work. What makes insurance work is that the premiums are low. But the only reason the premiums are low is because a lot of people pay premiums that never put in claims. So fire insurance works because most houses don't burn down. Auto insurance works because most people don't get into car accidents. So the companies collect all this money, and then they pay out the claims to the few people that have accidents or where their house burns down. The same thing works in health insurance. Health insurance works because most people don't put in claims. Most people don't get sick enough to need it, but they pay the premiums because they know if they get cancer, if they get a brain tumor, if they get something really bad, they don't want to be financially ruined with medical costs. So they buy insurance. But insurance isn't there to give you free health care. But that's what people seem to want. You've got this whole idea about, well, what about people with pre-existing conditions? Why can't they get coverage? Well, because it's not coverage when you already have a condition. It's like if your house is on fire, you can't buy fire insurance. No one's going to sell it to you because they know that they have to make a payment. The insurance company wants to sell fire insurance to people whose houses probably won't burn down. If they know the house is going to burn down for sure, there's no reason to accept the premium because they can't win. So you can't say to the health insurance industry that, there's no, you can't discriminate based on pre-existing conditions, because then there's no insurance. Because who the hell would buy it? Why would anyone buy insurance if they know they can just wait until they get sick and then buy it? So it doesn't work. This whole system is flawed. And I pointed out that they're going to have to seriously increase the fines for people who don't buy health insurance, or make a huge prison term or something, because the way the bill stands right now, eventually the entire insurance industry will collapse, and this will be complete socialized medicine. And it's going to be this.
I think that's what President Obama wants. He wants a single-payer system ultimately, and it's just pretty sad.
Well, and that's what we're going to end up with, and it's going to be a single-payer system but all the money to pay for it is going to have to come from the government, which means it's going to cost us a fortune. So if we think health care is expensive now, wait till we see how expensive it is when it's free from the government.
Yeah. Anyway, I'm calling about silver.
Uh-huh.
I saw one of your vlogs on YouTube. You said you thought it was going to double. Just wanted to know if basically, I know you still probably think that, but I just wanted to know what your reasons were.
Well, I mean, they're printing a lot of money, and they're not mining a lot of silver. I mean, I just think that the supply and demand, silver is scarce, and the demand is going to keep growing as people, want real money. We're finally within days of launching Euro-Pacific precious metals. So if you are interested in buying physical coins from me, we're selling. See, we've always been selling these Perth Mint certificates where you can hold gold and silver and platinum into Perth Mint. Well, now the Perth Mint has a program where you can buy for physical delivery out of a New York location. So now all the coins and all the bars that the Perth Mint mints, you can actually get them delivered very inexpensively. See, before, if you wanted to take delivery, you had to order physical from your Perth certificates, and they shipped from Australia, and it's expensive to get to metal. Now it's very inexpensive because it's all coming out of New York. So we're now doing physical for the first time, where you can, just buy, specify the types of bars and coins you want. And, so I'm going into physical silver. More and more companies, are going to be sprouting up. More people are going to be wanting to own real money. They're going to want to own gold and silver, not just in America, but in China, in India, all around the world. And, there's not that much of it. It's going to go up. I mean, there's no doubt in my mind that it's just going to go higher and higher and higher. That's why I'm introducing it to my clients. That's why I've been recommending, since I think 2001 and 2002, when I started with the Perth Mint, I've been recommending my clients buy gold and silver, because all I can see is that they're going to go up. And if you look at this last decade, the decade of that we're ending has been one of the worst decades. I think it is the worst decade ever for stocks. The Nasdaq is down about 50% for the decade. The S&P is down 20% for the decade. Average American had, their money in an S&P fund. They're down 10%, 20% in the fund, but now they're down at least another 10 or 15% in fees. So mutual funds for the decade have got to be down 30, 35% over a 10-year period. That's abysmal. Meanwhile, look what's happened. Silver started the decade at $4 or $5. It's at $17. Gold started the decade at about $300, and now it's over $1,000. So people are going to realize, wait a minute, you can make a lot more money just holding money than buying stocks or real estate.
Gotcha.
You there?
Yep, I'm here.
Yeah,
Okay.
Anyway, the direct number for the precious metals company should be 888-377-3722, which is 888-377-EPAC for Euro Pacific, EPAC. And I think it's working. If it's not, then just call the regular number and ask for Tony Bevilacqua. He's the guy that's starting up the retail, the coin business. And for the Perth Mint, we're still doing that. Call up for those. Those are great as well.
Okay, great. Thank you.
Sure. The next caller is Ahmed in Michigan.
Hey, Peter, can you hear me?
Loud and clear.
Great. Thanks I really enjoy your show. I just have a really quick question, a historical one. I'm reading The Lords of Finance right now, and that's a book about how the Federal Reserve created the Great Depression. And
yes.
One of the points made in that book is the Federal Reserve Chairman at that time, Benjamin Strong, he left the rates too low because he was trying to support the British economy back then.
Absolutely.
Do you see any analogy to the way the Chinese are pegging their currency to ours to support our currency, the way the we supported the British currency. Do you see any kind of historical analogy there?
Yeah, I've actually made that analogy several times, both for Japan and for China. They're making the same mistakes. Benjamin Strong actually died before the Depression hit, and his predecessor, a successor, came in and tightened monetary policy, and that was the right thing to do. But unfortunately, they blamed the tightening for the collapse. The real problem was that rates were too low, but it was actually done to help the pound. See, the pound was losing value, and there was a gold drain. And so in order to help the pound, we deliberately weakened the dollar with low rates. That's obviously what China is doing with the RMB. They are keeping their rates very low and trying to keep capital from fleeing the United States. And what is China doing? They are inflating asset bubbles in their economy, in the real estate market, in the stock market. And when those bubbles ultimately burst, whether or not there is a depression that follows depends on the type of policies that the Chinese pursue. If they pursue the same types of policies of Hoover and Roosevelt, then they can repeat our experience. My bet is that they're not going to make those mistakes. And that some of these asset bubbles will burst, but that the underlying Chinese economy will actually improve once resources are allowed to be redeployed more effectively, when the Chinese currency is revalued upward and their citizens finally have the purchasing power that their hard work and productivity would normally have entitled them to, but for government subsidies that have transferred that purchasing power to America.
Okay, so in terms of your potential hyperinflation theory in the U.S., one way of determining when that's going to happen is really to see how speculative the Chinese market is, because that's sort of the proxy. Looking at the Chinese market, seeing how it looked, back in the late 1920s in the U.S., because that's when the bubble will likely burst in China, meaning that hyperinflation will potentially happen in the U.S. because the Chinese won't be able to prop up our economy because they have their own
they
problems.
will stop. Remember, Great Britain fared worse than the U.S. when the markets went down, and we emerged from that depression. It took us a lot longer than would have been the case without all the Roosevelt and Hoover policies. But by the end of that depression and the Second World War, we were the most powerful economy in the world. That wasn't the case in the 1920s. It was still Britain, and we had a lot of prosperity. So I think China's future will look pretty bright once they decouple from our policy. The question is going to be, for us, is what's going to happen to America? What are we going to do? Are we ever going to do the right thing? Are we ever going to shrink government and restore sound money and cut government spending and repeal regulations so that we can be a prosperous economy once again? I mean, we are in a big ditch, but we can get out of it. But we'll never get out of it if the government is preventing us from doing it. So we got to get some common sense into Washington. That's the reason that I'm running for the United States Senate, is to bring that common sense, my knowledge of economics, my understanding of the Constitution, and these big picture economic items to the Senate, because they don't have it. These guys are clueless. They have no idea what they're doing. If they did, they never could have voted for that health care bill. I mean, they know absolutely nothing about economics, about basic business. I mean, how could they be running our country? I mean, they're running it into the ground because they're so clueless.
Mm-hmm.
All right, well, thanks for the call.
Appreciate it, Peter. Good luck.
Thanks. Next up is Ben in New York. Go ahead, Ben.
Yeah. Hi, Peter. I ultimately agree with you about the long-term prospects of high inflation or hyperinflation, but I was reading a book called America's Great Depression by Murray Rothbard. He's talking about
that's a great book. I read that book years and years ago, and I have it up on my recommended reading list on the Europac website. Go ahead.
Yeah, the problem I have with you constantly talk about inflation is that when you have this huge bubble in the 20s and then it finally popped, the Federal Reserve took drastic actions. They cut their discount rate from about 6 to 1.5%. They flooded the money with the monetary base. They pumped it up. But the banking system was broken because it was like today. They're all insolvent. So I don't understand how the whole fractional reserve system is going to survive and we're going to have hyperinflation unless according to like Jim Sinclair, hyperinflation, he says, is a currency event, not an economic event.
Well, it is.
Does it have to do more with the exchange rate than the commercial banking system?
Well, it is a currency event. Remember, back in the 1930s, there was a limit to money creation because we were still on the gold standard. Roosevelt seized everybody's gold, and the dollar was devalued from 20 ounces of gold to 35. But and prices fell during the 1930s. We did have a deflation, but of course, consumer prices didn't fall as much as capital goods. So when you compare the two, you did have consumer prices rising relative to capital goods, and that was where we had the correction and the misalignment of prices that happened during the bubble. But it happened within the context of a gold standard, and it would have been much more orderly and quicker had the government not impeded the market's attempts to rebalance the economy. But now we don't have a gold standard. We have fiat money, and the problem is the government can simply print and print and print and try to prevent the market from rebalancing the economy and get people to continue the behavior that caused the problem. Namely, they can keep us spending. They can keep giving us money to spend. Let me finish my point. But in order to do that, they have to keep printing money. But they're printing money, but nobody is making any stuff. So eventually they print so much money that it has very little value, and people start to see the value falling, and nobody wants the money. And then you get this spiral where the minute anybody gets any money, they want to get rid of it, and you have this velocity that picks up, and then you get that terminal phase of the currency where it collapses like they're going in Zimbabwe right now.
So it's ultimately the debt level. I mean, the government, the national debt gets so big, and all these private debt gets so big.
Well, that's part of it. Well, what happens is the debt is so large that the government can't pay the interest on the debt through taxation because the public can't pay that high tax. They don't have the integrity to default, and so they print money to make the debt payments. And then the more they print, the more inflation there is, the worse the economy is, the bigger the debt goes. And again, it's all this spiral. We are in that situation. I mean, all the ingredients that have led to hyperinflation in other countries are present in the United States. And we are going to go down that path. We will end up at that destination if we don't do a 180-degree change in policy. And the longer we wait to make that turn, the more difficult it's going to be to accomplish the maneuver, and the more painful it's going to be for the country.
Yeah, one more question. Jim Sinclair talked about that, the exchange rate will fall so much that the Federal Reserve, he talked about like a gold rule, a price gold rule, or certificate ratio that they'll reinstate. That basically that if the gold price rises, that the Fed they'll give them an indication to raise rates or whatever. They'll stabilize the dollar somehow, like just before hyperinflation.
Well, they need to stabilize the dollar, but the only way they can stabilize the dollar is to stop printing them. And that means the Fed can't buy mortgages anymore. They can't buy other asset-backed securities. And they have to let interest rates rise to the point that people want to hold dollars because they have a good rate of return. And in order to do that, though, they have to allow banks to fail. They have to allow the federal government to basically default on its bonds, because if interest rates go to a level that's required to stabilize the dollar, the Treasury can't make the payments on the debt. That's just basic math. And also a lot of the entitlements aren't going to be able to payments are not going to be able to be made. So it's going to force austerity on the federal government. If we do what we need to do to protect the dollar, then the federal government is going to have to make all the difficult political choices that it hasn't been willing to make. And the problem is, if the politicians put enough pressure, they'll never defend the dollar, so the politicians don't have to make those choices. And instead, we have hyperinflation.
So do you see like a rough timeline? Because there's only so long that a government could spend $1.5 trillion deficits.
I don't know. The size is already unprecedented. We're in uncharted territory. We're literally living on borrowed time. There's that old expression, how many straws can you put on a camel's back? You never know until the final straw breaks it. So I don't know. I mean, I don't know how long we have. I know that we have on a collision course with disaster. It's like there's a ticking time bomb, or I don't know how long the fuse is or how much time we have. I know it's going to go off, and I know I want to be prepared. That's the basis for my entire investment strategy is to be prepared for that event, to not have my money in U.S. currency, to not hold U.S. dollar-denominated bonds, to have my money out of U.S. assets so I don't go broke when that happens. Because I know it's going to happen. It's only a question of time.
One more point is a lot of these deflationist people who subscribe to this view say that you could just put your money into treasuries because this is going to be just a regular depression. I don't understand why they ignore the problem of huge government debt, and they're going to have to print the money.
I don't know. I don't know why they get that wrong. I mean, there's going to be deflation in terms of gold. That's fine. So if the deflationist tells you to keep all your money in gold, then I don't have a problem with that. But the minute he says you got to put your money in paper dollars, that's not going to work because the government fights deflation. See, deflation is what we need. Whenever you have an inflationary boom, the cure is the deflationary bust. Prices need to come down. Money supply needs to contract. We need deflation. That's what the economy needs to heal. But the government doesn't want deflation, and they have a weapon that can fight it, and that is inflation. They keep printing money, and eventually they destroy it. So it's not going to work. You're not going to get a classic deflation if you're measuring prices in dollars, in paper dollars, because they'll just keep printing them. Why is there no deflation in Zimbabwe? It's hyperinflation. They got 90% unemployment. I keep hearing people say, well, you can't have inflation with 10% unemployment. Well, Zimbabwe's got it with 90% unemployment.
Yeah, okay. I don't worry about having my money in treasuries because I'm one of your clients, so it's they wasn't even an option.
All right.
Okay.
Well, thanks for the call, and have a happy holiday.
You too.
The next caller is Evan in California.
Yeah, hi Peter. How you doing?
Good. How are you?
Good. This kind of ties into what you were talking about with the last caller. After reading your books and a bunch of other books, I've been convinced about the ultimate demise of the dollar sometime in the future. And one thing I've been doing this year is preparing for that collapse with buying junk silver. And my question is, can you envision a post-dollar demise where at least temporarily you can say that basic food items and gas can be purchased with silver coins? And if not, what do you see happening?
Yeah, I mean, I do believe that at some point, there will be, that type of barter arrangement, even though it's not really barter if you look at silver as actual money. But I do think that there will be situations where people will recognize the value of those junk silver coins and be willing to exchange goods and services for payments to be made in those silver coins. Now, what might happen is that activity might actually be illegal, right? It might be in a black market because the government might ban that. The government might say that merchants are prohibited by law from refusing to accept dollars or from transacting in other currencies. In fact, because of the tax laws, and I know there's a bill that Ron Paul has, which to try to repeal the capital gains tax on gold and silver, which is essential. Because, see, the reason you have to repeal those taxes is because there's not a real gain. Let's assume that you want to protect your wealth, and so you let's say somebody has $1,000 and they convert it into $1,000 worth of silver. And then the dollar loses 90% of its value. And that silver has a dollar value of $10,000. But as far as how much oil you can buy or how much food you can buy, it hasn't changed. You can buy the same amount of food or the same amount of oil. But the problem is if you go to spend your silver coins, the government's going to say, oh, well, you made 10 times your money, so we want you to pay an income tax of, equal to 40% of that gain. But it's not a real gain. All you did was avoid a loss. But it also makes it impossible for people to really, transact in these coins, because if you bought the coin and then you actually exchanged it, you went and you use it to buy something, how do you figure out what the gain was and then pay a tax when you never even sold it? So, we really need to abolish that tax. But without it, all these transactions will be illegal. Everybody who is not reporting capital gains and buying and selling in silver or gold coins will be breaking the law. But you know what? A lot of people might be breaking the law because it might be that the only way to get certain items might be to get them on the black market. That's what always happens in countries where you have price controls or exchange controls because of runaway inflation. And America might not be an exception. And we might end up with price controls again because of the runaway inflation that the government creates, which will lead to shortages and black markets. That's how it always happens.
Right. You got to feed your family some way, right?
Yep.
Another quick question. I have mining stocks and silver and gold mining companies. Can you see where it might be some time in the future where I would want to be out of those stocks and into physical metals, or is that not something you're worried about?
Well, I mean, I own both. I recommend both. I mean, right now, I think gold stocks are still undervalued relative to gold, so I think there's a lot of money to be made for people who are willing to speculate in those stocks and understand the risks. I think there's a lot of upside potential there. So, but at some point in the future, hopefully, there will be a time when we do want to be out of gold stocks and we do want to be out of gold. But hopefully there'll be a time where I'm recommending, U.S. companies, big stocks, small caps. I mean, maybe I'll be recommending, U.S. bonds again. I'm hoping we have that. We made that transition. The 1970s was the inflationary decade where you had to run it from the dollar. You had to buy the Swiss franc. You had to buy gold. You had to buy oil. But in 1980, when we got Reagan and we got Volcker, that was the all clear. They did the right thing initially. And, the smart move was to get out of all those non-U.S. investments, buy the Dow when it was below 1,000, buy treasuries when they were yielding, 15% or whatever they were paying back then. There was a huge bull market that we had in the 80s that went into the 90s because we did the right thing in when Reagan first came in. Now, we didn't do the right thing during his entire term because ultimately we never got the spending cuts that Reagan promised. We never abolished the departments that he promised to eliminate, and that left the door open for all the new problems that came later, and we're stuck. We're paying for that now. So what we need this time around is we need to do the right thing, and we need to stick to it and follow through. And then if we do that, we can invest in America, in American companies.
Okay, thanks a lot, Peter. Merry Christmas
thanks.
to you.
Same to you. Next up is it Carl in Kansas?
Hello?
Yes, you're on the line.
It's Cole.
Oh, Cole. Okay. Yes.
I really appreciate the books. You've opened my eyes, and I do have a question. When will it make sense to buy a house? Because you'll be able to lock in before the money inflates and inflates.
Yeah, it depends on your circumstances. I mentioned that I recently purchased a house that I've been renting, and I didn't do it because I thought it was a good investment. I mean, clearly, based on the other houses that are in my neighborhood for rent, it is not a smart financial move to buy. But it was a lifestyle decision, and just something that the house had certainly gone down enough in value, and I'm buying the house for less than the cost of constructing it, that even though I know the house will lose value because of the circumstances, I don't necessarily think I am overpaying. I'm just not getting as good a deal as I might have been able to get, if I waited. But then there are other considerations that I had that made me feel like buying a house. But people have to look at their own environment and decide. But when you're buying a house right now, the one thing you have to understand is that you're not making an investment. You have to look at buying a house the same way you look at buying a car or buying a boat. Financially, it's better off to rent in many cases, but sometimes it's better to own based on your circumstances. And certainly there are certain markets that are different than others, and you can get a good deal on a foreclosure or buy a bank-owned property, and the mortgage rates are certainly really low right now. I mean, I took out a mortgage myself, and the rate was very low, and so that's another aspect of it that if you are renting, rents can go up. If you get a 30-year fixed-rate mortgage, that's not going up, and you can get a pretty cheap one. I think rents will be under pressure for a little while because of all the unoccupied houses. But at some point, inflation is high enough, rents will start to rise. And if you lock in a 30-year mortgage, who knows? By the time you make your last mortgage payment, the stamp on the envelope might be for a larger denomination than the check that you put inside it.
Yeah, that pretty much answers my question.
All right.
I've got my
Thanks.
down payment invested at your Los Angeles office. You guys are doing great for me. Thank you.
All right, thanks for the call. So I have 2 more callers, so let's not take any more calls. I only got 10 minutes left. Hector in Florida. Go ahead, Hector.
Hi, Pierre. This is Hector. I'm been a supporter of your campaign and been listening to you ever since, I would say, October 08. So thanks for the advice. And I was actually reading today The Wealth of Nations from Adam Smith. And
it's a great book.
Yeah, actually, it's a great book. And the last chapter, he's talking about the public debt. And he mentioned...
What?
The last chapter is the public debt. And he mentioned...
I can't understand. I just can't understand the last 2 words of your sentence.
Oh, the last chapter? The title of that chapter is the public debt.
Oh, the public debt. Okay, yeah.
Yeah, so he mentioned that it is better honestly to admit bankruptcy than like disguising it by a monetary like schemes or something, which is something that you have been like mentioning like ever since I listened to you. And I was wondering, what is your opinion that what will happen if we actually kind of default in part of our debt? I mean, what will be like the picture look like here in the U.S. if we actually like default?
Well, defaulting is going to be better than inflating. All right.
Yeah, that's what he mentioned.
Yeah, but obviously it's going to have repercussions. Certainly for our creditors who loaned us the money, who aren't going to get paid back. But again, I think they're better off under an organized default. And I wouldn't default 100 cents on the dollar. I think the U.S. government should try to find a way to default by extending maturities, by maybe doing some reductions in principal, but in a way that enables us to pay back a smaller amount of what we borrowed, but to do it with honest money. Now, obviously, that will initially reduce the credit quality of the U.S. government and make it more difficult for the U.S. government to borrow money, which is fine with me. I don't want to borrow any money. So the harder it is for the U.S. government to borrow money, the better off I like it as a taxpayer who has to pay it back. But politically, nobody wants to acknowledge that. I mean, everybody wants to pretend that no matter how much money we borrow, we're good for it. But we're not.
But for the private citizen, like for the average Joe, how will be the picture like if we say $4 trillion or something? The
average American is going to be better off because what that debt represents is a claim on the American taxpayer. So to the extent that we default on that debt, that takes that burden off the American taxpayer. You see, the alternative is that they raise taxes dramatically to make the payments, or they print money which wipes out the value of the average American's wages or his savings. So I think that working class average Americans will be better off with a default than with the alternatives.
But wouldn't that worse like the dollar? I mean, short term at least?
And the dollar will go down short term, for sure. It's got to go down. But it's going to go down a lot more if we create massive inflation to try to pay off the debt. So it's always a choice. It's always the lesser of the two evils. I'm not saying that we should be proud of the fact that we have to default on the debt. You know, it's not. I don't want a badge of honor. But the problem is we borrowed so much money, default's inevitable. We never should have borrowed it in the first place. But, you know, we're already in a bad situation. Now we got to make the best of that bad situation.
Okay.
And I'm just trying to be honest.
Okay. Yeah, I have a very quick comment. It's regarding the Roman Empire. There was a crisis in the 3rd century. And I don't know if you're familiar with that, but our situation kind of almost resembled what they, what they went through on that century, and they, had hyperinflation and everything. They started with a gold currency, and they ended up with a copper currency, and the government was collecting the taxes in gold, so the government actually, may force you to pay the taxes in gold. So, I mean, I think it's very interesting.
I mean, the Romans did the same thing. They debased the coinage with base metals But they didn't have printing presses back then. I mean, it would have been even worse if they could do what our government is doing. Our government, we don't have to debase the coinage. We just run off money off a printing press. It's a lot easier.
What they do they start taking out some gold of the coin because they wanted to pay extra money to the soldiers. That some emperor promised pay raises to the soldiers, and to pay those raises, they slash the amount of weight on the gold, and they keep doing that. That was the Romans. That was how the Romans created inflation. You know, we're doing the same thing. We're doing it with more technology, though, because we do it not only with the printing press, but with a computer chip. Anyway, hey, thanks for the call. Keep reading. You're reading a lot of good books, and you're learning. I like it. Last call of the evening is Bill in Washington. Go ahead, Bill.
Hi, Peter. Can you hear me?
Yes, you got 4 minutes. Go ahead.
Hey, I just wanted to say thanks a lot for what you're doing out there. You've definitely probably taken a lot of heat for bringing these points up before it was, so clear to people. I guess I have two questions. One is in regards to the dollar. If we look at all the debt that we've accumulated, both publicly and also privately, both businesses and consumers, it's pretty startling. It's over 300% of GDP. I was just wondering where do you think the point of no return is going to be for that?
I don't know. I mean, we might already be beyond that point already. That's the problem. But we've got to approach every day like we're at that point, and we have to invest that we're at that point. And I wish we were governing like we were at that point. Unfortunately, we might not really find out where that point is until we've passed it.
Yeah. And I guess a second part to that question is that, if we are to that point and we've sort of gone off the cliff, so to speak, what do you think the likelihood of, Bernanke and Geithner and the Congress, I mean, what do you think the chances is that those people already know that and they're just kind of, the Treasury and Bernanke are just buying time and the Congress just looks at it as, it doesn't really matter since, we're already going off a cliff, might as well give everyone everything.
Look, I think it's likely that some people know it, because if I know it, believe me, I'm not the smartest guy in the world, and there are other smart people out there that must know it. But I think the majority of our congressmen and our senators are completely clueless, as are, I think, the majority of our so-called experts on Wall Street or in our university system. I mean, there are some who know and, are just, doing what they can to go along and hoping that the day of reckoning is further into the future, that at least it happens after they've left office. I mean, that's their main hope. Well, let it be some other politician's problem. Everybody assumes that it's going to happen, later. That's the assumption people made with the tech bubble, when they thought that, it'll burst eventually, but not for a long time, and then it burst. They said the same thing about the housing bubble. Everybody always overestimates how much time they have before the chickens come home to roost. I think they're coming home a lot sooner than anybody thinks. I think all the things that have happened recently are all the signs that we're this is the end. We're at the final act in this horrible show that I wish we weren't participating in, but we are. And again, that it brings me back to my desire to go to the Congress and go to the United States Senate, because to the extent that there are a lot of senators that don't understand this, I want to make sure they do. I want to educate them. I want to spend my time not speaking to this audience, which already knows it, but the 99 other senators, where the majority of them, the vast majority, are completely clueless and have never tuned into this show. I have a lot of people that I need to educate, and I need to educate them fast. Anyway, I hear the music. The show is almost over. Thanks for the call. Look, everybody, thanks for listening. Have a wonderful and happy New Year and a Merry Christmas. I will try to tune in. I will try to chime into the show next week if I can. If I'm not here, understand I'm out there campaigning. I'm meeting the local Republicans to try to get more of them to understand me and to know me and to support me, because I'm running not just for Connecticut. I'm running for the whole country, for everybody that's listening to this show, to try to stop this tide before it drowns us. Anyway, thanks, everybody. Don't forget, go to www.europac.net. Call 800-727-7922 to speak to a Euro Pacific Capital broker. And it's not too late to pick up another copy of Crash Proof 2.0 to slip under the Christmas tree. Don't forget, buy it on my website at Amazon or at better bookstores. Anyway, take care, everybody. I'll be back in the new year, in the new decade.